Folks, we've got an emergency on our hands. So after the biggest GameStop surge in 3 years, well, the last couple of days you saw a reversal to the downside, and in today's video, I need to discuss with you what happened and whether it makes sense to buy the dip. Will there be a resurgence, or is this the end? We're going to go into the details and the setup and what's going on behind the scenes here. And as always, the only thing I ask in return is that you hit that ravishing like button and subscribe, and as always, make sure to do your own due diligence on all ideas presented here on the channel. If you're the one taking the risk, you got to be the one doing the ultimate frisk. Okay, so context here. Roaring Kitty starts tweeting Sunday evening. People chase the stock up in the pre-market and then through open, and then it sells off. But the next day you get another pop to 80 bucks. Stock then proceeds to sell off to 35 bucks before pumping again to 65. Then it sells off to lows reached yesterday at 30 bucks, and then today sold off again, and at the point of making this video was trading at about 30 bucks. Meanwhile, Roaring Kitty has been regularly tweeting his memes the whole time, causing many to worry that, hey, maybe the Roaring Kitty induced excitement is wearing off. Now, we've been covering this basically play by play on Twitter/X, and here's what I said yesterday morning, quote, volume for GME coming in very light this morning versus the last couple of days. Dropping off volume is a horrible omen for upward momentum. Expect more support levels to be broken down before this reverses. A much needed breath is happening now, but the real game is when the next wave gets bought up. The farther it drops, the more it can bounce in the resurgence. Now, we are now about a day after that tweet, and floors continue to be broken. And without a reversal of volume, we can expect more and more downtrending. You go ahead and you analyze the volume that first day. Well, it was huge. Then the second day, still huge, but a little bit lower. Third day, lower. And the fourth day today looks like it'll be about less than half the first day. So why does this matter? Well, the volume coming in was upward sentiment volume. People buying based on Roaring Kitty and or on the resurgence of belief in the meme trade. But instead of awareness and publicity motivating more and more volume into the stock the last couple of days, well, it's actually been fizzling out pretty damn fast. And I believe there's one key reason for this, and that is the pre-market session that we had yesterday. What happened then? I believe the sell-off right here was a throttle attempt from hedge funds, and it worked pretty well. By aggressively dumping shares in the pre-market, they were able to stop the momentum from breaking out another day and going to a new all-time high. If they waited a few more hours into open, their attempts would have been broken up by trading halts. But trading halts don't happen in the pre-market, so it was open season for them to dump. They likely attempted the same thing the day before during market open on Tuesday, and then that simply got bought up into the after hours, so they realized, okay, wait, we're going to have to dump in the pre-market so that there's no trading halts killing our efforts. So I believe if you're looking at the data right now, it seems pretty clear that hedge funds said, okay, if we want to kill new attention from converting into new volume, and we want to stop that new volume from buying in and thus accelerating the momentum and enthusiasm, well, that means that we must dump now. We must kill the uptrend now. This is the last chance we might have. And whether you agree with me on this theory or not, the truth is that they are still dumping. And in fact, new short sellers are coming out of the woodworks by the minute to dump and bragging about this publicly. If you are a hedge fund proudly shorting GameStop right now, well, one of two things must be true. Either one, you're ignoring history that suggests that that just tends to piss off retail a lot more and cause you to get squeezed a lot more, or you believe that you and your buddies are all going to coordinate at the same time and continue to force the price down. And it seems to be the latter is the reason why you're seeing a lot of these hedge funds come out and start shorting. Well, I believe that's a big reason why AMC's own dump yesterday, even though it came on the grounds of massive share dilution, wasn't nearly as bad as the GME one. It's because short sellers are focused on GME. They're not focused on AMC. Short sellers are worried about GME. They're not worried about AMC. Why would they worry about AMC when Adam Aaron, the CEO over there, can't issue shares fast enough to help short sellers? I believe that GME short sellers are much more worried and much more focused on GME simply because they look at the long-term trend of GME, they look at the balance sheet, they look at the overall bigger picture, and they see, wait a second, the board over there doesn't bail out its short sellers, but the board at AMC bails them out again and again and again. If there's any rally that could potentially hurt short sellers in AMC, well, the CEO over at AMC, Adam Aaron, he's like, yeah, let's go ahead and dump some shares. So that's why it was so important to kill GME's momentum this week. Hedge funds simply know that the best way to prevent a dynamite from detonating is to simply pour water on the wick before the fire gets to the end of said dynamite. And that's what I believe happened in the pre-market yesterday. And it was very effective. If that fire wasn't put out, we could have easily seen the momentum pick up and go exponential that day. But instead, you saw a huge dousing of momentum that continued into today. And think about it this way, folks. 2 days ago, if someone looked at GME, its momentum, they looked at all the coverage everywhere, they were thinking, okay, this looks like a buy. The momentum is hot. But now if someone is looking to buy into GME, they might think, oh, okay, this is just another one of those pump and dump situations. So what short sellers managed to do here was completely derail any of the upticking enthusiasm before it even reached peak enthusiasm. Of the people that are enthusiastic and buy stocks like GME, there's some that are very much die hard, buy and hold at any price, but there's a lot of other ones that quite simply just want to buy, make a profit, and get out. And when all of a sudden you've just doused the momentum, well, those people that are kind of in the middle are like, well, we don't want to be a part of this dump situation. We don't want to catch a falling knife. And so all of a sudden you've killed the momentum before any kind of confidence can be rebuilt up in the stock. And folks, that's why I believe you've seen 2 consecutive down days in the stock. So the question now is, will there be a resurgence or not? Well, I believe there's a huge chance there will be, simply because the short squeeze setup is so hot and the battle is so ripe. Short sellers may have won this battle, but I believe the bigger war is still on. And if you look at the bigger picture, I mean, this week wasn't in isolation. If you look at GME's volume just this week, it looks like it's going down. But if you look at it in the lead up to this week, it was actually aggressively breaking out. So the kitty tweet didn't actually start the resurgence of GME. It just simply lit the spark to the dynamite that was already being built, which means that this current cool down is likely just a pushback in an overall momentum trend, one that will just continue to get bought up very soon. And folks, there's a few different interpretations of why volume might have been increasing before. One is that the divergence between the short interest and the price was just so severe that it was incentivizing people to start accumulating. There's also another increasingly popular theory that some hedge funds and institutional players were coordinating and buying, slowly accumulating to later offload when GME eventually broke out. We already know for a fact that hedge funds do not all play on the same side, and in fact, we know now that a hedge fund bought about 1 million shares right before the stock's 400% run and right before all of the Roaring Kitty tweets. Now, what about Roaring Kitty? Did he possibly tell someone in the hedge fund world that he was about to post again on Twitter before he actually did, allowing them to slowly accumulate shares prior to the pumps? Truth is, I've watched a ton of his videos. He seems like a pretty nice guy, and perhaps maybe he just picked up on a ripe setup that the rest of the markets picked up on too and wanted to drive attention to it. Perhaps that's what happened. And even if he didn't tell hedge funds, well, he may have just simply told other people in the financial space. I mean, some folks like famous penny stock promoter Zach Morris on Twitter seem to know about this as early as last week, well before Roaring Kitty posted about it. Zach Morris posted a blue version of what Roaring Kitty posted days before Roaring Kitty posted it. So, I mean, it could all just be a big coincidence, but it does seem like there is some evidence that suggests that there are different scenarios that could have played out before Roaring Kitty actually tweeted that. And because he hasn't answered anybody on what happened and why he chose that time, we just have to speculate. Mr. Roaring Kitty might also have sold his Twitter, and these tweets may not even be him. So who knows? We may never know, and innocent until proven guilty. But my thought process is whether or not there was a coordinated buying of GME before Roaring Kitty's tweets, or if people just all came to the same conclusion over the last week and Roaring Kitty's tweet woke the rest of the markets up. The truth is that the setup is still ripe should we get another wave of volume upward. Right now, GME is like a gas station covered in gasoline that just needs someone to light a match. And I believe that within the next week or two, you'll see someone light that match. Anyways, let us know your thoughts down below. Do you see GME as going back up again, or do you think the whole meme trade is over? Let us know your thoughts down below. We love hearing from you. And quick plug, our Squeeze 50 sale on ZipTrader options has just started. If you'd like to get 50% off our full program, including our step-by-step lessons, private Discord, and options alerts, make sure to check that out with the link down below. What are some recent alerts, Charlie? Well, thank you for asking. We alerted GME calls before the biggest uptrending day. Those ran from about $9.38 to $35.70 at highs, a roughly 279% run alert price to highs. We also alerted AMC calls before their biggest uptrending. Those went from about 88 cents to $4.80 at highs, a roughly 443% run alert price to highs. Obviously, we're in a super hot market right now, and these are some of our hottest winners. But if you're looking for well-researched, in-depth options ideas, rain or shine, well, ZipTrader options might be a place for you. I'll put the link down below so you can learn more. Coupon code SQUEEZE50 will get you that 50% off. Anyways, have a great rest of your day, and we'll see you in the next video.